President Trump just rolled out the One Big Beautiful Tax Bill with over 1,000 pages of new tax code that could affect you and your business. Well, lucky for you, I have combed through the entire document. In this video, we're going to do a detailed breakdown of all of the different areas that you need to be focused on to make sure that you pay less in taxes and don't leave the IRS a tip. Let's go ahead and dive in. If we haven't had a chance to meet, my name is Luke Turner. I am the co-founder of Moment Private Wealth, where we help business owners make smarter financial decisions with their money. So again, what are we talking about today? The One Big Beautiful Tax Bill. So let's dive in. Number one is going to be tax rates. These are the rates that you pay on each incremental dollar of income. So let's look at the brackets for 2025. 10%, 12%, 22, 24, 32, 35, 37%. I went through them quick because we've got a lot to cover in this video. But in 25, when you make income, you're still going to be subject to those same tax brackets. The new tax brackets aren't going to go into effect into 2026, and they're not dramatic changes. So nothing to fret here for 2025's income. Number two is going to be the SALT deduction. This is a big one. A lot of people are really excited about it. So previously in the old bill, there was a $10,000 limit on the SALT deduction. Okay, this SALT deduction was state and local taxes. That's what SALT stands for. But if you had over $10,000 in state and local taxes, you could not deduct any of that. Okay, and this ran into a big issue with folks that are in high income tax brackets or high income tax states like New York and California. But the new bill allows you to deduct $40,000. So be thinking about that as it relates to your SALT deduction, and be very excited if you're paying over $10,000 in state and local taxes today, because you're going to get to deduct more in the future. Child tax credits. This is one of the biggest credits for folks that have children, incentivizing US citizens to have more children. It allowed you to deduct $2,000 per child in the form of a credit. So not a deduction. What this means from a credit standpoint is that if you owed $10,000 in taxes, now you only owe $8,000. And for each kid that you had, it went up by $2,000. So if you have 3 kids, 2,000 times 3, $6,000. Well, lucky for you, this is going up by 10%. So instead of $2,000, it's going to be $2,200. The lifetime exemption. This is the amount of tax exemption that every American gets. Right now, it's $13,990,000. So what this means is that you could pass to the next generation $13,990,000 to them and not pay any inheritance tax, which is 40%. So we don't want to pay that. But the new bill allows this to increase. So it goes from that $13.99 million all the way up to $15 million. And it makes it permanent, where we can also have that inflated or adjustment inflation every single year. So very good for folks that are over that estate tax exemption. Also, make sure you include your business value in that because that is part of the estate taxes. All right, for those of you that collect tips, there are gonna be no taxes on tips up to $25,000. So this is a big news, because previously every time somebody got tipped, whether they were a server, whether they were a caddy, anybody who was collecting tips had to report that as income. But now we can deduct up to $25,000 in tips. So big news here. All right, car loan interest. Previously not deductible, now is going to be deductible, but with a couple caveats and rules you should listen closely to. Number one is going to be that the cap is $10,000. So $10,000 of deductible interest. So if you pay $10,000 in car loan interest, you can deduct that whole amount. But wait, only if you were making under $100,000 of adjusted gross income. Easiest way to think about that is income. There's some adjustments there, but for today's video, think about it as $100,000 of income. So a lot of people are going to phase out of this, but could still be a great tool for folks that are making under that $100,000. All right, the one you've been waiting for, the Trump accounts. So a Trump account is an account that you are going to be able to open, and it's incentivizing people to save money for their children. So if your child is born between January 2025 and the end of 2028, you're going to be able to open an account, fund it through employer contributions, and you're going to be in a position that you're going to get $1,000 tax credit. So big account there that you should be looking at potentially opening. Bonus depreciation, the thing businesses have been waiting for. So as a reminder, bonus depreciation was 100% back when the original Trump bill was rolled out in 2017. It's been slowly going down, and at 2025 it was only going to be 40%, but it's going all the way back up to 100% bonus depreciation. This is big news. It is going to be something that a lot of business owners should be taking advantage of. If you're not taking advantage of bonus depreciation, you own a business, you should be talking to your CPA today, not tomorrow. Section 179 expenses. These are going to be typically vehicles that you're going to be purchasing where you can depreciate them 100%, different than bonus depreciation, but gives you an opportunity where you can depreciate those vehicles. Now, one of the big caveats previously was that there was a cap on how much you could depreciate. Now that cap has been moved up to $2.5 million. So if you're looking for ways towards the end of this year to save some money on taxes and you own a business, this could be a great tool for you to have there be that $2.5 million deduction. All right, now big changes to qualified small business stock. QSBS is where if you are structured properly, you can defer up to $10 million of capital gains. And not only defer, but potentially eliminate. Well, big news is that we're increasing this by 50% from 10 million all the way up to $15 million. So if you are looking to start a holding company, you're starting a new business, really look into that entity selection. You got to be structured as a C Corp, and there's some other variables that you need to make sure that you meet to be eligible for QSBS. So make sure that you're focused in on that if you're starting a company today. All right, so we just covered a bunch of topics as it relates to the new tax bill. If I had to guess, after watching this video, you probably have questions. Well, good news is that if you look in the comments below, there is going to be a link to set up a meeting with me where we can talk about any of these topics, any questions that you have. If you enjoyed this video, please subscribe below. We're gonna be putting out more and more content just like this, and we're gonna get you educated, up and running on financial topics, specifically for business owners.